Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago home office today on, let's say, a lovely Wednesday afternoon in Chicago. We still have these wild little air pollution Canadian wildfire events. So that's not all that cool. Canada, thanks for that. But otherwise, it's a very nice, lovely summer afternoon. Joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jay Kingsley, and returning to the Grain Feed from Fresno, California, Senior Feed Advisor, Miss Natalie McCarty. Team, how are we today?
Great.
Doing pretty good.
Excellent. You guys having the same beef with Canada I have right now?
We did for a couple of days, but we got wind out of the south. So the smoke is gone and the humidity is back.
Okay.
And weather is great in California.
Mm-hmm.
Well, you know what? I feel like that's always the case. I just always hear great things, Natalie. So that sounds fantastic. You guys, we have a lot to run through today. So let's get to it. Paige, if you would kindly timestamp the broadcast, it is Wednesday afternoon. It's closer to 3:30 Chicago time. Just a quick look at the board. We were mostly in the red today. We did have a slight recovery in the corn futures market because December corn futures did break $4 per bushel here today at the board on Wednesday. We did manage to recover back above $4 for that final settlement. So that final settlement was just down 0.75 cents at 401 and a quarter. So I think we'll have to check back in to get a little more excited for those feed buyers when we settle below that number, but we'll talk about that in a bit. We had December wheat roughly unchanged, 529 a quarter. Novi beans down 6 and a quarter at 984 and a half. And December meal, that somewhat stubborn little byproduct, down 360 at 281.30. And just in case we chat the soy complex a little bit today, December bean oil is up 20 points at 53.62. So let's start with the corn market, because you both are participants in our Feed Foundations program. You are both servicing our dairy and livestock producers on their feed procurement as well as risk management and working with feed vendors throughout the industry. So as we look at this corn market, as I noted, we ultimately did break $4. We did not settle above it, so might be a different conversation. But as we at least look at a three handle for some time here today, everyone's focus, it feels like at the moment, is futures focused. What's next? We broke 4. When do we settle below? Will we hit last year's low, 385? All justifiable questions, especially as we head into next week's WASDE report. But what about those cash markets you guys are seeing? Because Natalie, you are seeing corn pulled from the Midwest and the plains all the way out west to California. So what are you seeing when it comes to this physical corn market?
So, the physical corn market seems to be all over the place from a basis side. What we are seeing, though, is that bids are getting hit, bids below those posted numbers. It does feel like people want to sell some corn and get some coverage on the books at this point from the seller side. And, from the buyer side, folks are looking at this $4 mark, which, proves typically to be pretty firm support, as we saw today with it closing above it. And they're going, maybe a place to put on a layer of corn at this point in time, and then stair step into the rest.
Yeah, I think that's an interesting observation, because it does feel like we want to give this time from a future standpoint. We don't get too greedy with how low this thing would go. But yeah, that's an interesting point. I mean, a lot of people do ultimately have some targets working at what appeared to be some of their better overall corn prices they've seen. I mean, last year at this time, we did inch our way towards 385 futures ultimately. So we're probably rivaling last year's physical cash numbers. Words can be tough. But Jake, are you seeing a similar move in the Midwest and in the Plains? Is basis having a similar price action?
Yeah, I think if we start in the Midwest, there's a little less movement on the basis front there. Pretty steady. And I think it's driven by the fact that futures are so soft and grain producers are not turning loose of bushels at this moment. I think there will come a time when they have to reckon with a finite amount of bin space and a sizable crop, and grain will move. But the Midwest basis values have been more steady than the rail destination markets. And I think probably the reason we're seeing some of the movement in the destination markets is that those folks are starting to see some opportunity to take a little bit of a position and be a little speculative potentially in their cash positions, thinking that they can buy it in a little better price later on. And also, we've touched on before that rail rates are changing a little bit. So that's creating a little bit of opportunity for some of these players. And it's not uniform in the plains and in the southern southwest part of the country either. You know, like Natalie said, you've got a mixed bag. You've got some folks that are now come down and their corn basis offers are rivaling last year's lows, or potentially even improved upon them a little bit already, while there's others that are very steady at the numbers they've been offering for a few months now, close to or slightly elevated versus last year's numbers. And again, I think that's just a matter of individual vendors' positions or willingness to go out and take a little more risk, or potentially their connections and pipeline back to the Midwest and confidence and ability to source corn at better values when it does finally break loose from the farm. So as Natalie said, I think the bid is your friend. If you're going to go out and take advantage of this breakdown in futures, you've certainly got to go in with a number in mind for what you're willing to own price wise and put that in front of your vendors, because not all offers are equal right now. So that's important. The other piece of this that we've got to address is that, yeah, futures have come down and are touching the $4 mark on the December contract. So that's worth considering. But for most of our folks, we're still talking about keeping that very front loaded if you are going to start buying for this next crop year. Really try to operate in the October, November, December window, or at the very worst, if you're going to go out further forward, try to keep a good chunk of it in Octove Dece and a little bit in January, February, March, because we are looking at full carry on the board, 6 cents per bushel per month out forward through May. That is the market doing the work to get grain producers to sell their crop without basis having to go and do a lot of that. So as a feed buyer, it's probably a little irresponsible for us to go out and say, go start buying a bunch of corn against full carry, right? It typically will come in or futures will come our direction over time.
And Jake, to elaborate there, I mean, the theory is if we're trading September corn at $3.80, let's just use round numbers, December corn at $4, you move to March, we're at $4.20, May at $4.30, July, just round up to $4.40. And in theory, all things unchanged, every time we roll to a new front month, we should see that largely erode the nearby contract, right? So, I mean, if you are seeing a market in full carry with this that is largely driven by what we assume is a healthy supply, more than offsetting its demand, that we are going to see that front month erode and drop as you do roll to each month. Does that sound right?
Yeah, and maybe if I can put it in a little bit different terms, it's that we're sitting here saying the market is willing to pay $4 for December corn today, and then you're willing to pay an extra 18 cents to hold it till March. So there's 6 cents a month to store that stuff, January, February, and March. That's what we consider full carry, is the 6 cents a month to put it in a bin and keep it there, pays your bills. But then by the time we get to March, that March contract probably comes down closer to the $4 mark or wherever December starts to finish out. So a grain producer needs to be selling while the carry exists, and a grain or feed buyer needs to be holding off. Manage your risk on the top side if you need to, but hold off on actually capturing that futures value until some of that premium to store it has been eroded.
Today, for example, an OND price was like 401. to September is 422 a bushel. Okay. So what does that mean? That's about $7.50 to $8 a ton difference in pricing if you were to book an OND versus an OXAP, assuming basis is even at this stage of the game.
Okay, well, there you go. So then your motivation to then stay nearby on those physical purchases, if you will, and then perhaps use the board to hedge, give yourself some ceilings here on maybe that further out purchasing you require of, whether it's Jan forward or April forward, whatever that might be, use futures and or options to try and mitigate that carry in the market, if you will. Also, very subtle jab, Jake, by using the word rivaling without any hesitation at all.
I thought about it for a long time.
I would have done the same. Guys, let's talk the soy complex for a moment, because I did the Part of Plate podcast earlier today. Please listen to Part of Plate if you do not already, hosted by the one and only Katie Burgess this morning. And going into the show, she had asked, hey, can we ask while we're recording, what's up with the pop in soybean meal? And I said, absolutely. But then by the time we were recording, I said, actually, there isn't one. We have largely taken that away. Meal has been really choppy. Now, I would say it's been in a pretty tight range, all things considered, especially relative to the past, 3 or 4 years here. But largely has been within, let's say, a 275 to 290-ish type of range. But the last few days, it was on the up and up. Today, largely pulled back. I'd say beans themselves were roughly the same. No, beans tried to run back up towards $10, but then ultimately failed, fell back to 984.5. So some interesting price movement in the soy complex. Natalie, what are you seeing from your side that is having some of the more impactful differences across the soy complex and how it does impact our dairy farmers?
Well, I think a lot of what we have seen in the market is this biofuels program and how big is it going to be? And that really kind of decides what direction prices go. The one thing I want to point out, a lot of these policies that have been put in place or announced, they are under review at the moment. So as you get speculation that maybe the programs are not going to be as big, then all of a sudden soybean oil goes down. Conversely, meal goes up. So I think we had a little bit of that going on. There was some news about the EPA on July 29th possibly changing some of their climate policies, which could affect biofuels. And so, yeah, sure enough, if you look at a chart, oil down, meal up. I think the other thing you need to keep an eye on is right now the funds are short. So that's the investors in the market are record short. On Friday, they were like over 133,000 short. Back in the olden days, a record short would have been 60,000. Okay, so we're very, very short. And when you lay a futures chart over the top of that, whatever the funds do, typically futures tend to follow. So as they've sold, obviously the meal market has gone down. But at some point, the funds will reverse that position. And that's when we're going to see a run.
And Natalie, I think turning towards managed money, I think that is a very interesting conversation, because when you look at a managed money position chart for soybean oil, really over the past year, like they take near record long positions and then go back to a pretty sizable net short, all within maybe 2 or 3 months. And then they repeat that pattern. They ended up repeating that pattern truly over the course of a 12-month period. I think they did this at least 2 or 3 times. Meal has just kind of been really since last October, they went from a massive net long position to, as you noted, record net short. And it's just been kind of one straight shot all the way down. And at some point, Natalie, you're right. I mean, I don't know what triggers it, but managed money in theory will ultimately begin to cover these shorts. And when that position does start to at least reverse to an extent, we are going to see some support here. And as we've talked about a lot, that 280 futures threshold, the market, I think, takes that very seriously. We talk about the December contract finding that support over a 10-year period now and not wanting to spend too much time below 280. We know the other months can on the deferred contracts, but Dees just doesn't like to do it. They don't like to trade below that, for too long of a period of time. So really interesting point to watch that managed money position. is how do you feel that we should be watching this protein market then, from now through the spring? I mean, if you are buying protein, what is your stance on basis versus this futures position we're seeing right now?
Well, again, basis has been great on both canola and on soybean at this stage of the game. So basis is good. Board, Ocnovdis board closed right around 279 today. But conversely, again, looking at the carry in the board, OXEP is around 292 on an average. So a $13 carry if you were to book an OND versus an OXEP pricing right now. So what does that tell you? Carries in the market tell you there's a lot of something, right? They're trying to get you to not take it now and to hold on to it. Problem with meal, there's not that much storage for meal. So, it really does. There's a point they can hold it, but then there is a point where it needs to move to market. So I feel like we're going to continue to see pressure on this market. I do feel like the funds are going to reverse and probably take us for a little bit of a ride here, maybe October, November, December. But the fundamentals of the market right now are that unless the biofuels program gets turned on its head, we're going to crush a lot of canola meal and we're going to crush a lot of soybean meal. So there's going to be lots to go around at this stage of the game, which to me puts pressure on pricing.
Okay. Well, we'll have to see what that EPA draft proposal ultimately does look like. And I think, like you mentioned this, Natalie, I think we're at the comment submission period is ending this week, and then they maybe have a month or two to review, but we should have their decision in the next 2 months, perhaps, to kind of give us that guidance for what it should time out well with soybean harvest and the real ramping up of our crush program, to then see how we're impacted through, the rest of the fall and winter. So that'll be really interesting. Jake, any notes from your side on the protein side of our feed ingredients?
One of the questions that I keep getting is, where is the bottom in this thing? And that is a very tough question to answer, right? I think, Natalie, you're experiencing a lot of the same. And so that one comes back to managing risk with some flexibility if you can help it. But at the end of the day, these are some very good values to be owning. So we haven't been quite as aggressive on the corn side of things, but on protein, it feels like it's hard to pick the bottom, but these numbers today are certainly worth owning for maybe even the first half of the feed year or a little further out, and then start to try to create flexibility after the fact, play a little bit of offense, as we call it, on managing risk there. I think what we saw this last week, getting down to the 275 mark and just one little blip in soy oil perks that entire market back up. Basis has been steady for the most part for a handful of weeks now, to where that kind of just reassures me anyways that we're probably closer to the bottom end of this market than not. At a certain point, domestic and global players step in and start buying this stuff to do something with it. And so there's a lot of new news to digest as far as what this renewable diesel program will do and how global green energy may reshape this thing. But at the end of the day, these are really good values to be owning. So hard to argue with 280 futures and the best basis values we've seen in a handful of years in this market.
Yeah, I think it's a very fair point and probably a good spot to wrap this up, because I think that's exactly what we've been trying to tell some folks on the protein side of it. It's just hard to be where we're sitting right now. Are we bullish this thing? Not really. And I think, as Natalie pointed out, we've got some potential, upside considerations we have to keep an eye on, and whether that's a pullback in bean oil because of maybe disappointment for the renewable side in the final EPA draft proposal, or perhaps it's, something from a different side of the business, managed money deciding to ultimately cover a substantial part of their position. So upside risk is there. We're not seeing it right in front of us at the moment, but like Jake, you just said, as long as things are sitting pretty on both sides of this market and some of the best pricing we've seen, might as well step in and take some pretty decent ownership. So on that note, Jake, Natalie, great to have you today. Great work to you both.
Thank you, Jim.
Thank you.
Absolutely. We'd also like to thank the Everag Insights crew for their support. Thank you to Paige for her production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We really appreciate your feedback. That's all for today. See you next time on the Grain Feed.